What's shaking in the Bitcoin world? Get ready, because Bitcoin Bulletin is firing up the hype train with a rapid-fire rundown of the biggest stories hitting the crypto space right now. First up, is Bitcoin too expensive? We've got a deep dive into a single metric that might just prove BTC is still a prime buy, even after its latest surge. Next, hold onto your hats because we're diving into a jaw-dropping $355 million in liquidations as Bitcoin blasted past $115K. And the big question on everyone's mind: will the Federal Reserve's expected rate cuts actually fuel this rally even higher or send us into another correction? We've got the analysis you need. Then, we're shifting gears to the miners. With the Bitcoin hash rate hitting record highs, are they facing squeezed margins and a potential power land grab due to surging AI demand? We're breaking down the challenges and what it means for the network's future. And finally, get this: Bitcoin volatility has hit a decade low, now sitting right alongside the biggest tech stocks. We'll explore how institutional demand is truly transforming this market and what it means for your portfolio. Don't go anywhere. If you're getting value from this, smash that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you're always in the know. Think Bitcoin is too expensive? Think again. We're diving deep into a simple yet powerful metric that suggests Bitcoin, even after its recent price surge, still presents a compelling buying opportunity. Often called digital gold, Bitcoin's scarcity is its superpower, a concept few digital assets can claim. Unlike easily replicated digital content, Bitcoin's design prevents unauthorized creation, solving the complex Byzantine generals problem. With gold's market cap soaring around $25 trillion and Bitcoin's still under $3 trillion, there's potentially 1,000% upside based on this valuation alone, not even factoring in its utility as a payment method or DeFi platform. For those with a long-term vision, Bitcoin's journey is just beginning. This metric could be a game-changer for your investment strategy. But what happens when Bitcoin hits $115K and traders get REKT? Bitcoin just surged past $115,000, hitting a daily high of $116,317 and marking a nearly 3% weekly gain. But this explosive move came at a steep price for leveraged traders, with over $355 million in liquidations across the crypto market. Meanwhile, all eyes are on the Federal Reserve. A Reuters survey of 107 economists reveals that a whopping 105 expect a 25 basis point rate cut on September 17th, potentially lowering the target range to 25%. Weakening labor market data is fueling these expectations, with markets already pricing in multiple cuts by year-end. While President Trump continues to pressure Chairman Powell for more aggressive action, technical indicators are showing mixed signals. CryptoQuant's Bull Score Index has 8 bearish indicators, a pattern seen before Bitcoin's plunged to $75,000 in April. The CoinGlass Bull Run Index also suggests we're about 3/4 through the current bull cycle. So, will the Fed's move ignite another rally, or are we headed for a correction? Macro conditions could be the deciding factor. Traders are feeling the pain, but what about the backbone of the network itself? We're talking miners. The Bitcoin hash rate is absolutely skyrocketing, hitting record highs. But this incredible network security comes at a cost. Miners are facing vanishing margins as difficulty levels surge to 136 trillion and global power costs climb. The rise of AI is creating a massive demand for computing power, leading to a potential land grab that could squeeze miners even further. Will they be forced to sell their mined Bitcoin to stay afloat? Or will they find innovative ways to pivot and adapt to this new energy landscape? We're exploring the critical challenges facing Bitcoin miners and what it means for the future of the network's decentralization and security. While miners navigate these power struggles, something remarkable is happening with Bitcoin's price stability. Get ready for a paradigm shift. Bitcoin's volatility has just hit a decade low, a stunning development that now places it on par with major tech stocks like Apple, Microsoft, and Google. This transformation, detailed in a new report by Bitcoin Suisse, is largely fueled by increasing institutional demand. The report highlights that even a small allocation of Bitcoin can significantly boost risk-adjusted returns in diversified portfolios, tripling them with just a 10% stake while adding minimal extra volatility. This newfound stability is solidifying Bitcoin's position as a mainstream asset, moving beyond its speculative past. Despite its impressive performance, Bitcoin still represents a tiny fraction of global financial assets, signaling massive potential for further institutional adoption. The report also notes Ethereum's growing role in tokenization and stablecoin settlements, positioning it as crucial infrastructure for digital finance. We've covered price, traders, miners, and stability, but what's the single biggest takeaway from all this action? And that's a wrap on today's Bitcoin Bulletin. We saw Bitcoin's digital gold potential highlighted, a massive $355 million in liquidations alongside Fed rate cut speculation, miners facing squeezed margins amidst an AI power land grab, and Bitcoin volatility dropping to decade lows, rivaling tech stocks. If you found this breakdown valuable, make sure to hit that like button, subscribe to Bitcoin Bulletin for all your crypto news needs, and ring that notification bell so you never miss an update. Follow us on all social platforms for real-time insights. We'll see you next time.